Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Mathew. We've got three stocks to talk to you about today, two of which depend on the consumption theme in some form or the other, and the third, which also, to a certain extent, it depends on, well, things going well in the economy. I'm keen to find out what my guest has to say about all three of them. Dharmesh Kant is joining me now. Thanks so much for joining me today. Dharmesh, good morning to you. And I want to start with Nestle
Good morning.
India because really that is about the consumption theme because it's about how much Maggie people are eating. Uh, Interestingly, Nestle's global entity talked about the India business having recorded a mid-single digit growth in the July to September quarter. And they said, obviously, that growth has been driven by popular brands such as Maggi, Nescafe, and Kit Kat. I want your take on this, and especially in the context we saw, in this past week, we saw Britannia coming out with earnings. What are you anticipating in terms of Nestle and the quarters going forward? And is it a theme that you would say is something that an investor should not miss out on?
Yeah, definitely, yes, Alex. If you look at Nestle, I mean, last 3 months, the stock is down almost 10% from the peak levels, whereas the market has gone up by 7%. So 17% kind of underperformance has already been there by Nestle. And Maggie is a household name. So they have weathered many storms as far as Maggie is concerned. Still, they have, managed to keep on with the business. And in the permitted guidelines, they have been doing their business. The brands are good enough, be it Nescafe, Maggie, or Kit Kat. Even Munch has done great things for them. And going forward, as the economy opens up, the local mom and pop stores open up. So this is going to take it more forward. I think their sales and I mean the entire business will come back to terms. As far as the valuations are concerned, they may look to be pretty expensive, given around 70, 71 kind of a PE multiple. But this you have to look in the context of the return ratios they generate. That is over 90 times ROC kind of a return ratio they're generating. So this is justified. I think any further market corrections where you see a 5-7% further downside on the stocks of Nestle, it will be a great buy. I don't see it falling further down, and maybe 15-20% kind of annualized return from here on is very much on the cards, just on the basis of the environment in which we are operating. And it's a consistent cash flow business, virtually no debt on the balance sheet, dividend payout, everything goes in favor of Nestle. So from my side, it's a thumbs up on Nestle. One should be acclimating it in their portfolio from here on.
Okay, so very clear signal coming from you on the first stock, Dharmesh. The second stock, in a sense, is also a consumption theme, and we've spoken about it in the last few weeks a lot, right? We've spoken about the auto sector as a whole, but within that pack, we've spoken about two-wheelers. But incidentally, when we've spoken about two-wheelers, we've thought that perhaps the rural segment is going to pick up faster. Motorcycles, therefore, are going to pick up faster. But Hero MotoCorp has a strong hold of that market. And we're talking about Bajaj Auto today because the numbers are coming out
Right.
today.
Right.
Let's actually put the expectations up on the screen. You have Q2 revenue seen at 6,933 crores. That's lower by 10% compared with last year. And net profit seen down about 20%. But incidentally, margins are seen coming in at 17.6%, and that's an improvement compared with last year. So, what's your rating, and what would you expect to see, not just in the numbers, but also in the management commentary about the quarters going forward?
Alex, management has been very vocal about the outlook on the economy, and they have been very upright about it, and they have been clearly putting forth all the dynamics which they see in the business coming forward. So, according to them, I mean, until November, things will be fine as far as the month-on-month sales data is concerned, and they have been getting steam. And with Bajaj Auto, the advantage is around 40-45% sales is from overseas market. So that gives it a natural hedge if things go wrong in India and worldwide things start recovering. So they still have a hedge out there, which is likely to be a scenario going forward. As far as numbers are concerned, we know the sales data number and it may be in line. And margins this quarter there may be an uptick in the margins, but going forward, I think margins will come under pressure primarily because of the input prices have gone up. Commodity prices have really sharpened up quite a bit, and that will hurt their margins in Q3 and Q4. Interesting to be watch out will be the December month sales. So here it is priced to perfection, though it's at a discount to Hero MotoCorp. Again, from late July onwards, if you look at market has gained 7%, Hero MotoCorp has gained around 11%, whereas Bajaj Auto has lingered where it is. So it has done nothing. It has been around 3,000 kind of odd levels. And at 18 times 1 year forward PE multiple, it does give it a cushion because normally it is at 22, 23 times. So I will not be taking any hard from the margins which they report this time around. But yeah, any dip out here because I see a market correction coming in. So around 27, 2500, if one gets a chance to buy Bajaj Auto, they should be buying it because they have to be at the lower end of the valuation multiple and with 23, 24 kind of return ratios on the table. So that is the P multiple they would be commanding. So 1 year forward, I see it trading at around 32, 3300 kind of a stock price. Again, 17% kind of a gain you can have on it on an annualized basis, provided one is getting it at 27, 2800. So one should be acclimating it on corrections.
Mm. Speaking of margins and speaking of strong brands, Asian Paints is the third stock that we have to talk about. And based on what we've seen on the crude prices, they're likely to see quite a bump in the margins
Yeah.
this quarter around. Net profit, though, is seen falling, contracting to 679 crore versus 823 crore, and revenue seen at 5,145 crore. Now, I would think that Asian Paints, to a large extent, Dharmesh, would depend on the market opening up, would depend on people feeling comfortable, going in for a new coat of paint. It would depend on people buying new real estate. What would you have to say about the Asian Paints business as it stands right now for the second quarter? And what are you looking for in terms of something that will, give you the confidence to buy into this counter for the near term and for the medium term?
See, I think the business ability to compound its profit on a consistent basis over the last 10, 15 years gives me the confidence. The company is virtually debt free, and as far as their run rate is concerned on the EBITDA and PAT CAGR, it's still there. They had a tough quarter. I mean, Q1 was tough, and Q2 normally is a not a so good quarter for them because of monsoons. But Q3 onwards, things pick up because of festivities, and there will be a pent up demand for them as well. But just because the kind of COVID era we are living in, people don't allow, many people to enter their home and do their print shop. So there's some discomfort. I mean, some kind of slackness in the top line and bottom line may be there. But going forward, I think the business will continue to perform as usual. They have been very, in times with pace as far as new products, new varieties, new customer experience is concerned, and technology and everything. And emulsified paints, water-based, has been there before. So crude now don't discount that much into the cost of raw materials. Earlier it was a significant portion, but as of now, with more water-based color being there, it has been mitigated to a large extent. But yes, as you have been rightly pointed, the low crude prices does benefit them. And valuation wise, they have always been expensive. I mean, there is no way you can say that Asian Paint is less expensive. And they have a clear cut outperformer in the market just because of consumption driven thing. I think this outperformance will continue going forward. If you look at fundamentals, it will appear as expensive. It's trading on the
Hmm.
upper band of the multiple ratios which they have been. But carry on. I won't suggest a new buy on Asian Paints, but if you're holding it, continue to hold.
Fair call. Thanks so much for your view on these three frontline stocks that we've spoken about today. Thanks for joining me,
Thank you so
as
much.
always. And to you, dear viewer, thank you so much for tuning in. I hope that this benefited you. Do stay tuned. Of course, earnings coming up on both Bajaj Auto and Asian Paints, and you'll find it on the website bloombergquint.com. Have a great day.